So it's Wednesday, the 5th of February, and we've got a little bit of a dollar reversal going on, and we're looking for some confirmation and some levels. And if we get this reversal, we get some really nice trade patterns with some really nice targets. I'm going to start with bonds first of all, because I think bonds need to do this reversal to continue. And we can see this. I'm going to start with the Bund, and then I'll look at the US 10-year. And we can see that even within this sideways consolidation, which we could argue, is a wedge setting up or a wedge pattern here, even within this consolidation, this daily 50 and weekly 50 moving average has been really important support and resistance. And this weekly, particularly, you can see first time back to it, we bounced off it. And from the other side as well. And here we seem to be breaking above these bunched up weekly moving averages in the middle after what looks to me like a big bounce and then a three-wave correction, which means we should see another swing higher with a mathematical relationship with this first swing, either 61.8 or an equal measured move. If from here we do that equal measured move, we get up to that weekly 200 moving average and that big important 236 fib level around 139.93 in the Bund. And so I think that is what we're looking for. So on this bullish reversal, if we hold above this weekly 50 moving average, our first target is up here at 136.5. And then the second target up here at 139 in a bigger three-wave corrective move. And then we see if that turns into something bigger. And so the key level to watch is this weekly 50 here in the Bunds at 132.5. And if we look down on the daily, you can see we had a little bit of a pause here at this daily 200 moving average also. Really important support and resistance. Here we are, not just above it, but breaking away and moving away from it. So I think buying pullbacks with that first big target here in the Bund is really good. If you're not sure and you go level to level here on the daily, look, here's our big three-wave move. You can see this 236 fib gave us a pretty nice pullback here. This big move, the 50% of this ABC could give us a little bit of a pullback here, and likely should, but we may have already had it with this first tag, and in which case holding above 133.02 gives us 133.85 and this 786 fib next before maybe we have a little bit of a bigger pullback. So big level here. Oops, I'm not doing this wrong here. Big level that I'm watching today here, 133.022. Closing above it, we keep going higher. We had the ECB last week, we've got the Bank of England tomorrow, and of course we've got the jobs numbers. We'll see how that goes. If we look at the 10-year note here on the weekly chart, you can see we're underneath all of the weekly moving averages in the US 10-year. And we made a big, from October 2023 here on the weekly, we made a big ABC correction. When you do that, so from this low to high, when you do that and you drop underneath the 236 fib, which you did here, your first target is a 786 retrace, as we just discussed, and that's what we have done. So from this low to this high, we're bouncing from a 786 fib level, and we're also retesting this swing low from April 2024, when you bounce from a 786 fib retrace, which we've drawn from this low to this high. If you reverse at the 786, your confirmation that you've actually reversed is going to be closing above the 61.8, which I've just, there we go. And so that's this level here. So on the weekly, we need to close and hold above this 61.8 fib level, which is here at 1.109.09, and if we can hold above it, we've got a 786 fib reversal, and our next target is this 38.2 minimum target. We could continue higher, so our minimum target here is 111.23. So this is a pretty key decision level. And because this is a weekly, obviously we need a weekly close above it, and then we can talk about this being a bullish reversal here in the US 10-year note. If we look at it here on the daily, you can see we've been back and forward at this really kind of important decision level. It's an inverted head and shoulders pattern, and you can see we've been underneath it for a week and we've had some false breaks above it. So it is all about the close, but this time this is all about the close above the daily 50 moving average in this one as well. So I'm watching this to see if we can reverse and we see then continued dollar weakness, if we can do that. So looking at this, and 1.0909 is what we don't want to close the day and the week back underneath. And then we have our breakout. So at the beginning of the week, we were looking at some pretty interesting trades in currencies. The favorite one was this move here in the pound, and if we look at where we are on the weekly in the pound, we were looking at a pretty strong bounce 2 weeks ago and a little bit of a pullback, and from this high to this low, potentially this was a 236 fib, so we had levels much higher in the pound, 126.0 and 1.276, which is where we have our weekly 200 moving average and weekly 50, and this is our weekly 20. So we've got more upside. At a minimum, after this really nice bounce, we're looking for a three-wave correction, which we've got, and the next swing higher. So these two swings should have a relationship to each other. So if I measure from this low to this high here and project it from here, we're looking for one of those ABCs kind of at a minimum. But I think with this close, we could be looking back to, for me, my favorite three-wave move is usually a 50% retrace, which could take us to these highs in the daily 200 moving average as well. And I kind of closed today above this daily 50 moving average, kind of confirms it. If we look back left, we can see that this, on pullbacks to this daily 50 or above it, we have seen really strong moves. And so closing and holding today above this daily 50 moving average is at 1.2499. Now I wouldn't rush into this one because we've got the Bank of England tomorrow, but I think any pullbacks that don't close back below this 1.25 level, we are looking for more upside, and 127.65 next in the pound. So clearly we're not quite at new highs, or we're looking to see if we can break above them though, and this is our next swing higher. And pretty much across the board we're seeing really nice moves and dollar weakness after some false breakdowns. For example, we were looking really at really big levels in the Aussie dollar and the Kiwi dollar, and they have worked. They were false breakdowns. They're pretty strong reversal signals. And so I think, clearly we've been in a really nasty downtrend on the weekly and the daily, but back towards these bigger moving averages are setting us up pretty nicely. Here in the Aussie, you can see here we are back testing this daily 50 moving average, which was resistance when we tried on the 24th of January. If we close above it here after this double bottom, we're going to test this high, and then again back to this daily 200 moving average in the middle of this range is what we're looking at. Pretty similar in the Kiwi. Of course, the biggest news is this week from Monday has been about the tariffs, and false breakouts are always pretty powerful reversal signals. If we look at this sideways range that we had been in the Canadian dollar, you can see from let's hide that for a minute. You can see this is our third tag false breakout, very similar. Third touches the trend lines very often are false breakouts, and then you expect the trend line to hold. So if we say that this whole sequence is done, I'm going to put my fib levels from this low in June 2021 and say that potentially we could see a bigger pullback here to this 236 fib level before we continue higher, if we're going to in the Canadian dollar, which is at 141. So clearly selling bounces, we've got further to fall, and 141 would be my first next pullback level. And my second one, if we keep going, I'm going to put my 237, I'm going to put the whole thing on here and say we could come back to these swing lows and this bigger 236 fib level at 134.39, 1.3439, and this swing low before we find support and continue higher again. It's also possible, remember, from the lows back in post credit crunch here, 2007, it's possible that we have completed here 5 waves. So 1, 2, 3, 4, 5. And if we look in this sequence here from the 2021 low, we could also say that potentially we've done 5 waves from this low. So it may be that we don't continue higher. I've been measuring, if you look at it this way, I've been measuring from this low and saying that, you know, if wave 5 here was equal to wave 1, we could see this continue higher to 1.6 in the Canadian dollar. But this could be one of those truncated wave 5s where we've got 5 waves up and we're just going to see a marginal new high, and then that's it. We're done here. And I think that if we were to break this 236 fib from this low, that would confirm it. So back underneath 134.39 and holding underneath it would say that this whole move is done, and we could see dollar strength coming back for the Canadian dollar, not the US dollar. So pretty interesting times in these currencies. I don't know what's to come, but short term anyway, I think that we could see some more continued dollar strength. Obviously, we're going to renegotiate those tariffs, and it's not, we've got a 30-day extension, and we'll see what happens from there. I think one of the biggest beneficiaries was the Mexican dollar, and this for me is the most interesting pattern, because if we zoom out, on the weekly here, we've been going sideways in a pretty nasty range, like a lot of currencies have been since November in this one. In fact, we could argue that's almost like Bitcoin, isn't it? But if we go from the high in 2020 to the low that we made in 2024, this is one of those big 50% things. Now, I'm going to lean on these fib levels because we got a really nice reaction at this 236 fib here at 18.5. And here we are reversing at a big 50% from the high in 2020 to this low. Reversals at a 50% level, or mean reversing markets tend to keep mean reversing. In other words, we from this low could see a 50% pullback back into these weekly moving averages if we break this 38.2 level at 19.89. So mean reverting markets tend to keep mean reverting, this 50% reversal. If we break 19.89, we're going to come down and we're going to pull back 50% of this entire rally, which we can measure. So on the downside, false breakouts are really powerful reversal signals usually. So that's what we're looking for, and that kind of 38.2 level usually lines up with the 236 fib. So underneath 20.13, we are likely to drop to 18.79 and back into these weekly moving averages for this dollar Mexican. Obviously, we could see a wobble in a month's time if these tariffs are reintroduced, but that's how it's looking at the moment. And that's quite a big dollar reversal that we are potentially looking at, and that's going to be the confirmation level, 20.13. The other trade that I've really liked has been the euro pound. We need to get the Bank of England out of the way tomorrow. If I look at the weekly of the euro pound, you can see that we've flipped all of our weekly moving averages bearish, and we're pretty close to the bottom of this range. But because we always look at measured moves, right? So from the high that we made in 2020 in this one to this low that we made here in 2022, we had a very nice 3-wave bounce, and here I'm looking for another leg lower. So here's our first swing, bounce, second swing. The 61.8 is one of those levels where it's pretty strong support and resistance, and you can see that's exactly what we back tested here. It's at 0.847. I think that we're going to see another leg lower here, and we're looking for an equal measured move, and the target for me, the euro against the pound, is 0.798 on the downside if we break this consolidation lower. Obviously we've got a few lows to get through, and we could argue there's a bit of a horizontal level here from this double bottom level that we made back in 2019, 2020. That comes in at 0.827 underneath there. I think we're headed down to 0.798, and we are likely to see pound strength against the euro. And when we were looking at this on Monday, which of course was tariff day, the reason for that was, basically the US is unlikely to place tariffs on the UK, mainly because we have such a big trade imbalance with them. The US has a £17 billion trade surplus with the UK, so they're we're in a much stronger position. They're very unlikely to put tariffs on the UK, where Trump seems pretty anxious to put tariffs on Europe, and that will put us in a kind of better financial position if that happens. So I think we could say that underneath this level, and we could, some people will draw this as a channel, but for me, 0.798 is a really clear target if we can break down underneath this support level from these previous lows. In fact, we could argue that they come all the way back here, and we're kind of around this decision level today here, 0.83 in the pound against the euro. So the Bank of England tomorrow, I'm not sure that the Bank of England tomorrow are going to cut rates, whereas the ECB have been on a pretty firm cycle. But once we get tomorrow out of the way, we could have a really nice swing trade setting up, and a really nice trend trade after quite a lot of sideways in these currencies. One thing that's really benefiting from all of the uncertainty, which is probably uncertainty is the trademark, a Trump trademark, but a weaker dollar is definitely helping gold, and so buying gold on pullback still looks really good. For this move higher, I had two targets, 2,883 based on fibs, and then 2,950. And this one's just going to keep running until it does. At the moment, I think that we had a little bit of a fib level that we've broken above here, 2,858. So a pullback here in gold. 2,858 is where I'm looking for us to pull back to for the next swing higher. No sign that this one has topped yet. It's just a pullback in a really strong uptrend. Good luck. Let me know if there's anything you'd like.